we are watching very closely today is financials, and we really started even pre-market starting to see those declines on the back of what we heard from JP Morgan and specifically Jamie Dimon.
Yeah, absolutely. And when we talk about the bank earnings, obviously it's the beginning of the second quarter reports that we've been getting. These are the first two of the large six banks to report. We're expecting to hear from Wells Fargo and Citigroup tomorrow. But the big story for JP Morgan, which, by the way, is the largest bank in the United States, is that they are growing concern about that recession. But it's a weird dynamic right now when you consider that the loan pipelines still look good. People are still going out and getting mortgages. They're spending on their credit cards, and that story hasn't really changed. But you take a look at the provisions for loan losses. This is essentially the amount of money that banks have set aside to make sure they can sustain any possible loan losses if a recession happens. That's tilting up.
Well, the bank also halting share buybacks, which is the other headline that we got out of that. What's interesting to me is, we always look to sort of get this commentary from Jamie Dimon and obviously kind of highlighting exactly what the conundrum is right now, saying, look, the U.S. economy is still in a very strong position, but there's other factors, geopolitical tensions, high inflation, waning consumer confidence, uncertainty about high rates. And then, of course, what's happening in Russia, Ukraine. A lot of that goes back to what we've been talking about before. That's not necessarily in the control of not just the Fed, of the U.S. And that's the big uncertainty, that until that cloud clears, things are certainly going to be more skewed towards the downside.
Yeah, and look, JP Morgan Chase is not a meme stock, at least right now it's not. And it's not among the more sexy names to talk about. But the reason why we talk about the banks so much, they're essentially the heart of the economy, right? They're the lenders and the safekeepers of our money. So when you see JP Morgan Chase put more money aside, you say, okay, well, this is significant because they're really seeing something in the economic outlook that doesn't look great. But again, it's such a weird dynamic because the consumer looks strong. Take a listen to what CEO Jamie Dimon said to analysts about an hour ago with regards to what the American consumer looks like.
And the consumer, I feel like a broken record. The consumer right now is in great shape. So even if we go into recession, they're entering that recession with less leverage, in far better shape than they did in 08 and 09. And far better shape than they did even in 2020. And jobs are plentiful. Now, of course, jobs may disappear. Things happen. But they're in very good shape.
They're in good shape, but things happen.
So let's kind of parse that, right? Less leverage, yes, in a point that you've made before, which is over the last 2 years, there's been a lot saved up as well among consumers. They're tapping into that. So, I guess the question is what's the breaking point? Yes, they're in a better position, but the longer we are in this high inflation environment, that consumer confidence we've already seen started to go down. At what point do they start to cut back even further because of what they're seeing?
Yeah, and again, that's the whole question of the demand destruction that we've been reading the inflation reports from the lens of, right? At what point are prices so high that the consumer activity is actually going to start to come down? If you talk about the second part of that piece, the consumer activity, we're not seeing signs of that slowdown yet. And that is explained by the fact that loans at JP Morgan Chase did grow by 7%. That's a story that we're probably going to see at the other banks as well. I'm actually very interested to see the more consumer-facing banks because they might be beneficiaries of the fact that the American consumer remains strong, which is a great thing for Americans to be out spending in this economy. But at the same time, if it's in an inflationary environment on things that you have to spend money on and it's eroding your savings and eroding your income that you have on a real basis, well, that's a massive problem. So Wells Fargo, Citigroup tomorrow will be very interesting to watch.